Howdy. Welcome back to Dion Talk. This is going to be one of those videos I do while traveling, so I don't have my normal map behind me, and you don't want to see the rest of this room because don't stay here. I won't name the place. But I'm traveling with my two brothers. One reached financial freedom by investing in real estate and has never in his life watched or listened to a podcast. My other brother has run a business his entire life. Both of my brothers have pretty much never had a boss. They've always ran their own businesses. And I asked them, I'm about to go and record a video with Michael Zuber from One Rental at a Time and Matt the LumberjackLandlord, two guys who have reached financial freedom by investing in real estate and have podcasts of their own to try to share their knowledge. And my brothers, with no knowledge of BiggerPockets or how podcasts work, came back with these two questions. So I'm going to ask you guys to cover these. The first question is now a good time to invest? With everything that's going on in 2021 with the eviction moratorium and the pandemic and all of this year. And the second question is, what do you think is going to happen with interest rates? And those were two interesting questions to me because that's an outsider's perspective of what matters to somebody who's thinking of investing now. So if you're thinking of getting started, here's two professionals with their opinions. And let's start with Matt. Is this a good time to start investing?
Always a good time to buy a great deal, right, guys? I think that, we'd still go deal by deal. So we look at the market. We look at what assets are overvalued, right? Just like anybody would. So maybe single families are overvalued, maybe duplexes, tris, or quads. Maybe it's 5 to 20 unit buildings. Maybe it's commercial buildings. We look and understand what the assets are that are performing and which the assets are that are overvalued. We're always looking to be a value buyer. And so the way that we do that is we just understand what we call it return on capital. I know that One Rental at a Time calls it yield, but we look at return on capital of what we put into a deal and then what return we get on that capital back. And as far as buying deals, yes, I've bought more this year than I ever have. I've bought a number of them off market because the numbers were really very strong and they were in an asset that was, quite frankly, during the pandemic, somewhat undervalued based on risk because of number of tenants. So it's what we really look at, which is, yes, it's always a great time to buy a great deal. We just literally do it deal by deal. On the interest rate piece, do you want me to answer that now?
Well, before you answer that, I want to point out, this is really awesome. Sure. When my brothers asked me those two questions to ask you guys, I said, it's always a great time to buy a great deal. I said, that sounds really smart. Where did you hear that? And now I get to live the rest of my life with them saying, remember what Matt said? Matt said it's always a good day to buy a great deal. They'll have no clue that that's been our thing for weeks.
I love it.
Thanks for that. So on interest rates, how do you see that going?
So I'm not an economist. I'm not like Mike. I am not a trained economist. However, I see the Fed having to do something. I see them having to taper sooner than they expected. I think that leads to higher rates, obviously leading to higher mortgages. I think what happens that's going to affect people more than the rate, I think banks' lending box is getting smaller. I think what they're lending to, I think they're creating higher restrictions there. I think that they want a lower DTI, which is debt to income, where, they had some in 2019. I was looking at a chart where they were approving some loans with people that had 51% debt to income.
Oh,
yeah. So that vintage of loan in 2019, it's much like a wine that tastes like vinegar. It is going to be a bad tasting vintage. You're going to see foreclosures from that 2019 vintage because of the fact that they had 51% DTI, and likely speaking, a lot of that didn't get better for all of them. It got better for some, I'm sure, but I bet a lot of them it got even worse for.
Yeah.
Which means their DTI was that much worse. So I see the banks, tightening up on lending. I see higher credit scores needed. I see lower debt to income needed. I think that's what impacts things the most. And then it comes down to, if it's not a national bank and it's more of a regional bank, I think it's going to come down to what they look at, which is local market saturation. And for those of you who haven't glazed over yet, that local market saturation is something where they look at and say they're a local bank. They want to be part of the community, but they only want to be so much of the community, not anything more than that. Because if things went sideways in that community, then that would take the bank down. So those are the types of things that I think that we're going to be watching more than just rates over the next 6 to 12 months.
Okay. And Mike, other than it's always a great day to buy a great deal.
Yeah. So obviously that is very true and something that frankly Dion deserves credit for. So Dion's brothers, Dion said that first. He did. So yeah, you could give credit to Matt or I, but give your brother a little shout out, because maybe a little punch in the arm. That's what brothers do, right?
But not today.
So I get this question a lot. So it's not uncommon that your brothers would ask this. I actually first step back and I want to talk about why that question comes. First and foremost, most people ask that question under the guise of trying to time the market, right? That's why they're asking the question. Is now a good time because they're trying to time the market. Real estate is not stocks. It is not crypto. It is not something that moves very quickly one way or the other. It doesn't really, it's more ebbs and flows. And also, unlike the market, you can always find and or create a great deal in any market, right? Because real estate is, you only need one buyer and one seller to have a transaction. So again, people are asking because they want to time the market, and real estate is not really timing the market. Second, a lot of people ask this because they're making the same mistake that all these YouTube channels are. They're pointing at a chart, and that chart is price or median price or value. And they're saying, hey, look, Diana Olick said we are 41% higher in 2021 than the peak of 06. Mathematically, that is an accurate but yet useless statistic. It is utterly useless, because real estate is not a pair of shoes. It is not a burrito. It is not something you pay cash for. It is a levered business. And what Diana Olick fails to say is, yes, while prices are 41% higher than 06, they are actually cheaper today because of your payment. Interest rates in 06 were 6.41%. Interest rates today are 2.87%. And your payment, even though the price is 41% higher, is lower. And you've had 15 years of wage inflation. So just stop the stupidity. It is cheaper today than 06 by a mile. So what is going on in housing? I would say it's always a great day to do a great deal. I preach do the work in your market, because if you're in Boise, Idaho, for example, kind of a frothy market, might be a bubble going on there. But if you look nationally speaking, it's a great time. It's very affordable. Do me a favor, only get 30-year fixed rate debt.
That's right.
Today, folks, inflation is north of 5%. You're getting debt at 3%. You're getting negative rates. Negative rates are good. All right. So yeah, it's a good time to do the work. That's what I'll say today. It's a good time to do the work. Matt's done more deals this year. Dion's done a deal this year. I have deals in contract right now because I want 30-year money. I'm not doing apartment deals.
Yes.
I am not doing stuff with variable rates. I think apartments could be in trouble in the future. I'm doing 30-year. I am so committed to this, folks. I am borrowing money at 4% on free and clear assets, because if I can borrow debt, call it 4, and inflation's at 5 or 6, I know I can do more with that because I'm borrowing negative money. So it's just interesting. And then on to interest rates. People ask this question, and I guess there's really two answers. Short term, in an interest rate world, I consider short term a year. Interest rates could go up or down. Yes, I do think interest rates could go down, but they can't go down much. However, if you look at a decade, there is without question rates will be higher by 2029 than they are in 2021. Yeah. How much higher? That's a good question. And oh, by the way, I would ask your brothers to go back and look at data from the 70s. In the 70s, rates went up 350 basis points. That would be like today going from 3 to 6.5. Most people believe if that happens, real estate will crash. Again, that's a interesting opinion that is not based on facts. Last time rates went up in a decade, 350 basis points, real estate doubled. Mm-hmm. It's just math, and the history's there. So, I've actually done the math. If the 30-year mortgage goes to 9%, we're toast. Yeah. Good deal is interest rates not going to the 30 years not going to 9% because the nations would be bankrupt. But could it go to 4? Could it go to 5? Sure. Yeah. So that's what I think about rates in the market.
Okay. Well, thanks for that. Really what it points out is two people with experience that have invested through the last housing crash really agree with the statement. Time in the market beats timing the market.
Correct. Yes.
After 2009, rents went up. So if you're buy and hold investing, buying now is better than waiting. If interest rates go up, people say, well, prices will come down. Data shows that's not true. So as we saw with Meet Kevin's video earlier, talking about a housing crash gets clicks.
Mhm.
So people who aren't doing the research will think there's a housing crash coming, so I'll just wait. Which works out for the investors that are doing the work now and taking action every day. Thank you both for doing this. I'm going to say congratulations now for reaching 1,000 subscribers on the Lumberjack Landlord channel, because it had to happen today. You were at 995 when we woke up this morning, and I'm pretty sure we got some people over there to take care of that. So congratulations, Matt.
Thanks, Dion. Much
Matt.
appreciated,
Look
guys.
forward to that 3-hour live stream on Sunday.
He ducks his head. I don't want to be seen. Thank you both. Until my next video, thanks for coming to my Dion Talk.
We're sorry, the number you have dialed is not in service at this time.